Robschild, no investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said millionaires don't need astrologers, but billionaires do, and so we begin. Today is Monday, August 19th, 2024. Today's episode, we're going to start by taking a look at gold, the dollar, and Treasury bonds. I always like to keep a close eye on the relationship between different assets and asset classes and when strange things are starting to occur. I noticed this morning it was a little more pronounced, gold seeming to sell off. It still did sell off a little bit today and went down. And so normally we would also see the dollar strengthening against gold. It doesn't always, but that's what we would normally expect. So instead we had gold selling off today while the value of the dollar actually dropped pretty sturdily today. So how can the dollar be going down in value while gold is also going down in value? It doesn't really make any sense. All the while, Treasury bonds actually went up today. This is TLT closing almost 0.5% higher than yesterday today. Very interesting. Now, it definitely needs to be taken with a grain of salt, partly because gold is still pretty close. Is it? Yeah, it's basically at all-time highs. So that's the first grain of salt. The second grain of salt here is that according to traders I watch and follow, they say that volume was unusually light today, so not very many people trading, and so strange things can happen when that happens. But if something like this were to continue, if gold were to really be going down while Treasury bonds are going up, that really says one thing: that's deflation. That's when stuff is expected to get cheaper and people are running into something that they can guarantee themselves a return on, which is the Treasury bonds. And so much so that the price of Treasury bonds is going up while the value of gold is actually going down. The strangest part about this equation, at least for today's little movements, is the sell-off of the dollar along with those two other things going on. I don't understand what could make that happen. Jackson Hole. Later this week, we get the Fed minutes on what these guys are talking about up there. Daily reminders. Remember, 2-year, 10-year yield curve is still past its second birthday, suggesting that there's a major economic slowdown coming very soon, and that the Somm rule has been triggered. Unemployment rates are going up and up and up, suggesting that the recession has started. Every time the Somm rule is triggered in the past, or has been, every time it has been triggered in the past, there was it spelled the beginning of a recession every single time. So it suggests that it's starting right now. I said yesterday I'm smelling a head and shoulders here, and it still can play out that way unless this high, the previous high of the S&P 500, breaks to new highs. If we close above this high, if we get up to 56.77, then this pattern will become out of play. I might have to eat my own hat if that happens. This is one of those times where I'm kind of astounded at what I see going on in markets. With Treasury rates going down, it does allow junk bonds to gain some value, and I'm just going to assume that that gives the most amount of weight for the rally we're seeing here in junk bonds, but it is also a tribute to how much people believe that there's no risk here in holding junk bonds and that they are just chasing yield. I don't expect this to play out very well. You know, the thing is with these bonds, like short term, when they're traded, you know, what's going on here? Who are the people making it cost more and more? Like, really? Well, the fact is that there's simply enough people out there that are buying it, and that's what's making the price go up. One thing that Benjamin Graham wisely says over and over again in security analysis, and I believe he does say this in the Intelligent Investor as well, there will always be times where junk bonds lose a lot of value, where you can buy them dirt cheap, nobody wants them, and that's the only time that you really should buy junk bonds. Junk bonds at par, especially, for him is like never touch them, because they'll always be cheap sometimes. Right now, they're going up in value so much that it makes me think that we're getting way too close to par value. Especially when the credit spread's tightening and this much. It's like people are taking way too much risk for the amount of yield that they're getting here. It's overvalued. I currently have puts on HYG for October. Maybe I might have another leg out there too, but I don't expect this to hold up. I think this would be a good opportunity to short here, actually. Or, the way I do it, because I don't short, but I'll buy puts. I'm obviously not the only one getting into options for October, as the October VIX futures term structure contract is very, very elevated still. It's still elevated now above the January. The market is pricing in October a lot of chaos. Last chart I want to talk about today is EWZ Brazilian ETF. This thing is absolutely chock full of companies that are just massively undervalued. The dividend on this entire fund is very high. I think right now it might be, I'll take a look. Yeah, so as of today it's 7.7%. And I mean, these are largely, the biggest holding of EWZ is actually Petrobrasilio. It's a PBR, and it is a large company that is very healthy and makes a heck of a lot of money, and the value of it is so unbelievably dirt cheap that it's just, I love holding EWZ for that reason. But anyway, on a short-term trading basis anyway, I talked about recently a double bottom here, breaking to the upside, and we have not reached the target of this yet. This very short-term pattern, which would be around 31.79 today, but today was a very bullish day, and we're in my view very clearly headed to that target on the very short term. And I would not be surprised to see this market normalize. The way I look at it is, with its valuation, is it's sort of being held underwater, like a balloon underwater. And even if everything else crashes, even if the S&P 500 crashes, you'll find companies that actually increase in value, or certain markets that can increase in value. And with this being so unbelievably undervalued, if investors finally wake up and smell the coffee to understand how valuations of companies work, I mean, just for it to get to a somewhat normal cheap value, you would pocket a huge increase in the value of these shares, the price of these shares. It should go up a lot. Very, very, very easily. Like I'm saying, it's like trying to hold a balloon underwater. That's the way I kind of imagine it here. Again, this EWZ is not full of like .com companies that don't make any money. These are companies that make tremendous amounts of money and pay out great dividends. So, but that's just my 2 cents. And That's all I have for you for today. Hope you enjoyed. Thank you for watching. Robschild and his crystal ball. Until next time, Robschild.